Hello and welcome to our webinar today, March 18th, 2021, preparing for COVID-19 recovery, loan options, and forgiveness strategies. And of course, this is being brought to you by Sachs LLP, Sachs Wealth Advisors, and S2 Solutions, which is our newest entity, our technology group. So some caveats that we need to always share with you. Remember that this webinar is for general guidance only. It does not constitute the provision of legal advice, tax advice, accounting services, investment advice, or professional consulting of any kind. And therefore, the information herein is not to be used as a substitute for consultation with professional tax, accounting, legal, or other competent advisors. And of course, we're here to help you. So give us a call or send us an email. We'll be able to walk you through those very specific things. And here's our illustrious group of presenters. Myself, Josh, Steve, and Shivani is our special guest today. And as Steve would say, we're going from left to right in beauty. And of course, Shivani, you win that. Here's the rest of our recovery task force. Angelo, Melissa, Amanda, Julia, and Matt. These are folks that are helping us with the PPP forgiveness. Perhaps you've spoken to some of them. And just to let you know, we do have a new service on the employee retention credit. You will see that information in the handout section. And here's today's agenda. But before I get into the agenda, I just want to let you know we are giving CPE today, and you do need to follow the proper protocols for CPE, which is to stay on the entire time, to answer at least in this particular case, I think it's 5 out of the 6 polling questions. We're going to go a little bit longer today. Complete the evaluation form, which is in the handout section, and stay involved. So today's agenda, this is the introduction. We're going to have a little discussion on the PPP loan statistics, frequently asked questions, economic injury disaster loan update, and then we're going to dig deep into the American Rescue Plan, history and highlights, Paycheck Protection Program, employee retention credit, restaurant revitalization fund, shuttered venue operation grant, tax provisions, and other relief provisions. So folks, this is going to be a little bit longer than usual, but we are also going to give a little bit more CPE. So if you can stay for the entire time, that would be great. And we're going to start off with our very first CPE polling question. When does March Madness start? The 2021 NCAA. Is it today, March 18th, which I believe is today, April 15th, September 3rd, or March Madness was canceled? So is it today, April 15th, September 3rd, or was March Madness actually canceled? And go on and vote. If you want the CPE, you do need to vote. If you want to just vote because it's fun, we let people do that too. We found that a lot of people actually like the polling questions, so feel free to vote now. Okay, I'm going to give you a few more seconds to vote so I can get up to a certain percentage and I'll start counting down. All right, counting down. 5, 4, 3, 2, 1. When does March Madness start? If you said it was today, you are right. Welcome to March Madness. Okay, I'm going to start off with some PPP loan statistics. You can see here, this is an updated slide through March 14th, 2021. So it's only a couple of days old. You can see the different sectors that are receiving the loans. The top sectors are accommodation and food services, about 17% of the amount, construction, 13%, professional, scientific, and technical services, 11%. And here's a loan size. It's no surprise. There's still most of the loans, at least 74.8% in the count, 19.2% in the amount. Over $2 million is 50,000 and under. with only 0.3% of the amount being over 5 million and also 0.3 being over 2 million. So as far as the percentage of the amount. Overall loan size, 66,000. And here are the banks who are actually giving out the loans to 2021 lenders. JP Morgan Chase is leading the way, followed by Bank of America. All right, this is a kind of a journey here, an application journey. We want to show you this slide of what happens after the application is submitted for forgiveness for the PPP application. You can see this wonderful flow chart after it's submitted to the SBA API. It could be declined, and then the lender needs to resolve and resubmit. If it does get to the SBA, it may go to the SBA pending validation. It may actually be rejected as a validation error, which then has to be resolved by the borrower. Or maybe in some cases, if you're finding this snag in submitting your applications, the SBA needs to provide further guidance. And if it's under SBA review, it's either approved or error hold coding flag or denied. And we do know that the SBA has been taking its time in reviewing those loans that are over $2 million. And we do not really have a hotline to call the SBA to find out where your loan is. I know that's come up in some questions. There's no specific guideline or hotline or magic place we can go to see where your loan is in the process with the SBA. I'm going to turn over this next section to my partner, Josh, who's going to go over some frequently asked questions. So Josh, take it away.
Hey, thanks, Todd. And to your point, you know, I've certainly heard that a lot of the banks are having challenges with the error codes and the hold codes with the SBA on this second time around. So that is a thing. It is happening. Unfortunately, we know people are anxiously awaiting their money. But what would it be without some revised additional FAQs after, you know, a year's worth of time and people have submitted and everything else? But nevertheless, so there's a revised FAQ 14 specific to how you report the number of employees on the loan application form. So if you're a sole proprietor, self-employed individual, independent contractor, your number of employees is 1. That is you. For other applicants, you have the ability to use your average employment over the time period used to calculate the aggregate payroll costs to determine the number of employees, or applicants can elect to use the average number of employees per pay period in the 12 completed calendar months prior to the date of the loan application. So again, this is really more to determine size of the business. I know a lot of people get hung up on employees versus full-time equivalents, but they did put out some additional guidance with respect to this. Okay, FAQ number 59. If a borrower that was eligible for a first draw PPP loan files for bankruptcy protection after the disbursement of the first draw PPP loan, is the borrower eligible for loan forgiveness of its first draw PPP loan? The answer to that is yes. However, question 60, if a borrower who was eligible for a first draw PPP loan files for bankruptcy protection after disbursement of the first PPP loan, you are not eligible to apply for a second draw PPP loan. So given your financial situation, you need to really take that into account for sure. Okay, number 61, to be eligible for a second draw PPP loan, a borrower must certify that before the second draw PPP loan is dispersed, the borrower will have used the full amount, including any increase, as we've reported previously. There was a few instances where you could go back and ask for more money on your first draw loan. So you have to certify that the borrower will have used the full loan amount of its first draw PPP loan only for eligible expenses. So the question is, how does this separate requirement that the borrower must use at least 60% of the first draw PPP loan proceeds for payroll costs affect the certification? So the borrower can certify that it will have used all of the first draw PPP loan proceeds only for eligible expenses if the borrower has used or will use the first draw proceeds for any or all of eligible expenses. And that was a requirement for those of you who have already applied for your PPP2 loans, that you have to have had exhausted all of your PPP1 monies. Also, borrowers should be mindful that failure to use the PPP loan proceeds for the required percentage of payroll costs will affect loan forgiveness. And remember, that is 60% payroll, 40% non-payroll. That has not changed. Okay, FAQ number 63. May applicants use SBA's established size standards, if you remember, we're either revenue-based or employee-based, or the SBA's alternative size standard to qualify for a second draw loan? The answer to that question is no. As we know, the loans are now narrower than the size eligibility requirement for first draw PPP loans. With some exceptions, the applicant is really eligible for a second draw PPP loan only if it together, again, with all of your affiliates, employs no more than 300 employees. And then don't forget there, we have the revenue decrease support as well. So again, employee size, no more than 300, and obviously the revenue declines. So, okay, number 65. As of December 27th, 2020 is an employer that receives a first draw PPP loan or second draw PPP loan also eligible for the employee retention credit? We know the answer is yes. Again, just make sure when you go through to determine, you know, for the employee retention credit, the piece that you're eligible for, that there is no double dipping between the payroll that is reimbursed by the PPP and the payroll which is now eligible for the credit. Okay, Todd, passing it back to you.
Thanks, Josh. Polling question number 2. What Looney Tunes character was Bugs Bunny's arch nemesis? Was it Elmer J. Fudd, Wile E. Coyote, Daffy Duck, or Mel Blanc? So I know that this is one that maybe some of you don't know the answer to, but what was a Looney Tunes character Bugs Bunny's arch nemesis? Elmer Fudd, Wile E. Coyote, Daffy Duck, or Mel Blanc? I'm going to let you folks start answering those. So far it's interesting the way people are voting. So I'm going to give you a little bit more time, because obviously you do need to answer the polling questions if you want CPE. Give you a few more seconds. Counting down. 5, 4, 3, 2, 1. Okay, it looks like most people answered Elmer J. Fudd. Actually, I had Daffy Duck, but we'll accept Elmer J. Fudd because Maggie said that that was the right answer. So now you know who the arch nemesis is of Bugs Bunny, and we will continue. And I'm going to turn this part over to my partner, Steve. Steve, take away more information on Idle.
Great. Thank you, Todd. I hope everyone's doing well. I would have guessed Wile E. Coyote, actually, so I guess I was wrong on that one. But in any event, just going to go over a couple items. This came out last week, but the SBA announced that Idle recipients get a further deferral of their payments. So if you took out a loan in 2020, the first payment is 24 months due from the date of the note, which used to be 12 months. You get a 12-month extension, and if you get an Idle loan in 2021, the first payment is due 18 months from the date of the note. So you get another 6 months. And also, if you had an idle loan, remember this program, while it is not new, so there were idle loans prior to the outbreak of the pandemic, there is an additional extension available as well. However, if you did receive an idle loan, you can voluntarily continue to make payments during this period as interest continues to accrue. So just something to keep in mind if you're having cash flow issues. Okay, on to the next. So as Todd had mentioned, and then you undoubtedly have seen, last week, the American Rescue Plan was signed into law by President Biden. It's a $1.9 trillion relief package. I'm going to go over some of the items that are in there relative to loan forgiveness and increased funding, grants, and whatnot. And then my partner Shivani is going to take us through all the tax-related provisions. But you see here that it was narrowly passed into law by both the House and the Senate before being signed by President Biden. And one of the hot button items that was notably excluded was the increase in minimum wage to $15. We will see if that gets taken up there. I would not think for a moment that this is the last relief package. I would think there'll be more. Is it combined with a tax package? We'll see, but I don't think this is the last of it. And I do think that this minimum wage increase will see the light of day. Whether or not it gets voted in, we'll see, but it's something that I don't think that the Democrats and progressives are going to drop. So as we see from this American Rescue Plan, it extended certain relief options that were in the CARES Act and the CAA that was passed at the end of 2020, but it also adds some new relief benefits as well. So first, as far as the PPP is concerned, there is talk of extending this beyond the March 31st expiration date. That is the last day presently that you'll be able to get loans, but there is a bill that nearly unanimously passed the House to extend this to May 31st, so a 60-day extension. We'll see where that lands with the Senate and ultimately gets signed by the president, but I do think that this is coming as well. As of now, the American Rescue Plan has just added an additional $7.25 billion in funding. There's still plenty of money left inside the program, 100+ billion, but I do think that they will extend the filing or the application date at least another 60 days to let more borrowers have access to the funds. In addition, some not-for-profits received some good news in that now there's a per physical location essentially threshold on employees, so it's not looked at as a combined group. So now not-for-profits who may not have been eligible for due to headcount are now eligible. And certain labor unions, social and recreational clubs, fraternal societies, provided they're below a certain level of lobbying and costs related to lobbying as well as expenses, they're now eligible too. And also we see on the next slide that internet publishing organizations, provided they meet these certain criteria, are eligible for PPP funding as well. But they must make a good faith certification that the proceeds of the loan will be used to support expenses at the component of the business concern organization that supports local or regional news. So that's just another threshold or step that internet publishing organizations will need to go through. An item that's received a lot of attention, and you'll see, Todd had mentioned it, but I want to mention it again. We have a specific group that will help with the PPP ERC coordination, but now there's a flyer that's in your handout section, but now that the ERC, the employee retention credit, due to the passing of the CAA back in December, the mutual exclusivity between the employee retention credit and the PPP no longer exists. So what that means is that borrowers are essentially able to claim both. So the American Rescue Plan has extended the deadline prior to the passage of this act. The employee retention credit was set to expire at the end of June. Now it's set to expire at the end of 2021. The same thresholds apply as of now. They haven't written any new rules yet, so we are waiting to see. The credit is still fully refundable, but now it offsets Medicare tax and we'll see how that interplay works. Is it in addition to Social Security and in replacement of? There's still some questions out there that are still open, and we'll wait to see as we get additional guidance. There's also expanded eligibility, both if you're severely financially distressed, then all your qualified wages will count, as opposed to being subject to the full-time employee limitation of 500. And again, what this limitation indicates is that if you have above 500 employees in 2019, it's all based off 2019, then your employee retention credit is limited to amounts you pay people not to work. But if you're below that threshold, then it's essentially any qualified wages. So that's a good benefit if you are severely financially distressed, which I believe is a 90% reduction in revenue, but I have to go back and check. They also added another criteria for recovery startup businesses that we see here as well. So an additional benefit that's available, that's one at 50K. But again, we're waiting to see what the rules look like before we see how we're going to apply this. Okay, now I'm going to turn it back over to Todd for another polling question. Todd?
Okay, polling question number 3. When is the first day of spring? Spring sprung on March 14th, Saturday, March 20th, or Wednesday, March 31st? We all want to know the answer to this question. When is the first day of spring? So start your voting now, and I will take you to the polls. Has it already begun, March 14th? Is it going to happen Saturday, or is it going to happen Wednesday, March 31st? Give you guys a little bit more time to vote on this. March 14th, March 20th, March 31st. Closing down the poll, 5, 4, 3, 2, 1. And if you answered the question Saturday, this Saturday, March 20th, you are correct. That is the first day of spring. Thank God. Turn this back over to Steve.
All right, thanks, Todd. I always giggle. I remember March 14th always as Pi Day 3.14 from high school. I always remember that, and haven't been in high school in a long time, but that day always sticks in my mind. So I too, though, I'm glad that spring is coming. So here's a really big item for eligible borrowers that's included in the American Rescue Plan. It's a restaurant revitalization fund. We've seen our restaurants, as we've been stuck to indoor dining or no dining at all, as restaurants have essentially been shuttered. We will see that this American Rescue Plan provides some benefit for these restaurants as well. There's $28.6 billion in funding associated with this. The application process is not open yet for this. It will be administered by the SBA, but we do think it's imminent, should be within the next 2 weeks or so. We're hoping for early April. The grant amount is limited to $10 million per eligible entity, together with your affiliated businesses, which will show what that means in a moment, and then $5 million per physical location. So if you are essentially in this criteria, and we'll go through eligible entities in a moment too, you're going to want to get your application ready as soon as possible. Definitely get your ducks in a row, because it doesn't look like there's a lot of funding. I mean, $28.6 billion is certainly a lot of money, but it could go fast. So we see that there is a size standard. So essentially applicants and affiliates may not own or operate more than 20 locations. So it's for the smaller businesses, and we see here how basically affiliated entities are defined. So something to keep in mind as they write the rules for this too. Okay, so here are the qualifications. Basically, in order to get a grant, you are going to have a reduction in gross receipts from 2019 to 2020. And SBA may release additional formulas in terms of how the grant is computed, but generally it's going to be the difference, like I said, between your 2019 and 2020. But for entities not in operation for all of 2019, you essentially take an average of your gross receipts of 2019 and annualize it and then take your average monthly gross receipts in 2020. And then for those as entities that were new to 2020 or not opened as of yet, there's benefit that's available for you too. But just keep in mind that any grant will be reduced by a first draw and second draw PPP loan. So that will be taken out of the money that you receive, but it still could be significantly beneficial, especially if you think about restaurants, especially in our area. A big component of what they were paying was not payroll so much as rent expense. So we'll see if that ultimately provides some benefit, but hopefully it does to our struggling restaurants. Okay, next slide. So here are the eligible entities, and it's restaurants, food stands, food trucks or food carts, caterers. Essentially, these are bars, saloons, brew pubs, tasting. A lot of different types of entities are available or are eligible. I won't read through all of them, but also similar places of business and where the public or patrons assemble for the primary purpose of being served food or drink. So a lot of eligibility out here. But again, we're waiting for the rules to be written. There will be a priority, meaning women-owned and veteran-owned businesses and socially and economically disadvantaged small businesses. The first 21 days when this does open, they'll have priority, but then it will be open to everybody else. And we'll see if they put more funds into this. Like I said, I'm not sure that this will be the last of our funding, and hopefully this provides a lot of benefit again to struggling restaurants. I know myself, I miss going to a lot of these places and have a lot of clients and friends that are involved in these businesses. So it's certainly happy to see that there's funding that's available for them as well. Okay, on to the next slide. This is what you can use the proceeds for. There's a pretty long, extensive list. It's similar to PPP in terms of the payroll and non-payroll costs, but also some other costs in here as well. And the SBA may determine that there's additional costs after they see how the process goes. One thing to keep in mind, though, you could be required to repay these funds if they're not used on these expenses. So something to keep in mind as well. Just a couple other considerations, namely, you cannot have applied for or received the Shuttered Venue Operator Grant. There's a good faith certification, and similar to PPP, you don't include it in, or it's not included in gross income. Expenses are deductible, and S corporation and partnerships essentially will get tax basis for this. So there's a good benefit there as well for those types of entities. On to the next slide, and I apologize if there's noise in the background. I'm having some work done around my home, so I apologize. The last item that's on my agenda is the Shuttered Venue Operator Grant. I know people that are out there are anxiously awaiting for this program to open. It's still not open, but similar to the Restaurant Revitalization Fund, we expect this to open in early April. So there's an additional $1.25 billion added as part of the American Rescue Plan to an already existing $15 billion grant program. So there's definitely funds that will be available through this program as well. And now businesses that applied for both a PPP loan after December 27th, 2020 can get this as well, but I believe they're going to reduce your grant by the PPP loan. And here we see again the list of eligible entities, the key being that you were in operation as of the close of February of last year. So I know it's a lot to handle. We're waiting for a lot of rules, especially on the employee retention credit side. Getting that extended for another 2 quarters for this year should provide some additional benefit as we move beyond this pandemic. Now I'm going to turn it back over to Todd for poll number 4. Todd?
Poll number 4. Okay. How old would John Lennon be today? Now, obviously, you need to kind of round to the nearest number, folks. Would it be 90, 80, 83, or 101? John Lennon of the Beatles. If you don't know who that is, then give me a call later. I'll give you some instructions. So how old would John Lennon be today? 90, 80, 83, or 101 years old? You guys go in there and do some voting. 90, 80, 83, 101. So we're getting the votes in. Think about when he died. I remember when he did die. It was a tragedy when he did die. Some of you may be big Beatles fans. 90, 80, 83, or 101. Okay, I'm going to count down. 5, 4, 3, 2, 1. Most of you had the answer, wow, it's actually a tie. The right answer is 80. He would not have been 101 years old or 90. He's 80 years old. Now I'm going to turn this next section over, I believe, to Shivani. Shivani, take it away.
Thank you. Good morning, everybody. I'm going to start off actually with some relief that IRS issued last evening at around 5:45, whereby saying that the extension to file and pay your 2020 income tax return is now May 17th, 2021. So just keep in mind, this is only for individual income tax returns as of now. Last year, we saw a lot of guidance come out after the initial guidance was issued by the IRS, whereby they added other types of returns like trusts, states, and stuff. But as of now, as of today or this morning, I can say that it's only individual income tax returns, which will now be due on May 17th. And this is an extension to file as well as make payments for any balance dues. This relief does not apply to your estimated tax payments for 2021 that are due on April 15th, 2021. But if you're filing your return or 2020 return, you're going to put it on extension, then you can obviously include your first quarter payment with the extension payment and make it essentially on May 17th. As I said before, this is only for individual returns, and we have to wait for further guidance if IRS is going to extend this relief to trusts, states, C corporations, any fiscal year returns as well. Where does the state stand up as of now? Maryland is only the state which has extended the due date of the 2020 tax returns to July 15th. New Jersey has some pending legislation which could extend the date to May 17th. Now, if you look at last year's, most of the states did comply with the federal deadline. So we are hoping and expecting that most of the states will also extend this deadline to May 17, but of course we have to wait for official guidance or official word to come out from the states. So diving into the provisions of American Rescue Plan, I'm going to start off with the individual provisions, and probably the most talked about provision was the recovery rebate. Now, as all of you know, there were 2 rounds before this of the recovery rebate stimulus payments. The first round came out in March of 2020 under CARES Act, where individuals were eligible for $1,200 of rebate and a qualifying child was eligible for $500. The second round was in December of 2020 under Consolidated Appropriations Act, which provided for $600 for individuals as well as children. Now, the third round is being provided under the American Rescue Plan. So under the Consolidated Appropriation Act, when the negotiations were happening, we all heard about the $2,000 number, but I think they only could agree on $600. So the balance $1,400 now is being provided under American Rescue Plan Act. These are payments against your 2021 taxes. So what essentially is being provided for in the recovery rebates now is $1,400 for individuals. So it's going to be $2,400 if you're filing a joint return. The dependent part of the rebate has increased significantly to $1,400 per dependent. Now they have reduced the AGI threshold over which your rebate will start phasing out ratably. So if you're filing a joint return, and if your income is over $150,000, the rebate will start going down. If you're head of household, it's $112,500, and for all other taxpayers, it's $75,000. Now, in calculating these rebates, IRS looks at your 2020 tax return and what your AGI was. If your 2020 tax return has not been filed, they will use 2019 amounts. Based on a news that IRS released yesterday, 90 million of these payments have gone out over the weekend to the tune of $242 billion. And out of that, most of them were electronic payments. Around 150,000 checks were sent out, which accounted for almost $442 million. The next talked about provision was unemployment relief, and I think this is probably the reason why IRS gave some relief on extending the due date, because this actually applies to the 2020 tax return, and they would have to make some changes to the tax programs to actually account for this. So the first provision there is that your unemployment relief, which is $300 per week, has been extended from March. It was set to expire in March. Now it goes up to September, early September of 2021. The next significant provision is your unemployment compensation is generally included in your gross income when you do your tax return. What has changed right now is that beginning in 2020, if your adjusted gross income is less than $150,000, first $10,200 of this relief received is exempt, so it won't be taxable. The key thing here is that the 150,000 AGI limit applies to all types of returns. So if you're filing jointly, it's 150 AGI limit. If you're filing as head of household, it is still the same 150. And if you're filing a single status, it's still the 150 AGI limit. So if you're below the 150 AGI limit, the first 10,200 will be exempt. Now, if you're filing a joint return, you and your spouse both will get this 10,200 exclusion each. So it essentially could be a bigger number. IRS has issued a statement on March 21st saying that if you have already filed your 2020 tax return, at this time, you should not go ahead and file an amended return to claim this exempt amount. You have to wait till they issue additional guidance. So I'm just going to go over a quick example to illustrate how this works, and then we'll go over the forms to show how it will look up on the tax return. So if you're paid $20,000 in unemployment compensation and your spouse is paid $5,000, technically you have $25,000 of unemployed compensation. $10,200 for you and $5,000, the entire amount for your spouse, is exempt. So $15,200 is exempt. And if you go over to the next slide, I'll show you how it has to be presented on the tax return. It will go on Schedule 1, which is your schedule of additional income and adjustments to income. On line 7 is where you report your unemployment compensation, which was $25,000 in our case. On line 8, you enter a code UCE, and we had calculated an amount of $15,200, which was $10,200 for you and about $5,000 for your spouse. $15,200 will be entered as a negative amount. Thereby, your additional income would be $9,800. IRS has also come out with a form or a worksheet where you can calculate the exclusion which will be allowed under unemployment. If you have any calculations of the amount that goes on Schedule 1, line 8, that was a negative amount we saw in this case, which was $15,200. I'm going to go over the provisions of the child tax credit now. There have been significant changes here as well. So let's talk about before the act came into place, where did we stand? The child tax credit was $2,000 per child for a qualifying child. And what was the definition of a qualifying child? Somebody who is not 17 as yet, who the taxpayer can claim as a dependent. That means generally the person needs to stay with you for at least 6 months. And if you were a US citizen or a resident. There were phase-out amounts also for child tax credit. So, if you were over $4,000 for joint filers, at $400,000 for joint filers, and $200,000 for other filers. In addition, for 2018 to 2025, if you have other types of dependents, you could also get a non-refundable credit of $500. So now the changes that have been brought about by the ARPA is for tax years 2021. So right now, this is only for tax year 2021. The definition of qualifying child has been broadened to include a child who hasn't turned 18 by the end of 2021. So now a 17-year-old is included and qualified for the child tax credit. The credit is increased to $3,000 per child. Remember, it was $2,000. And if your child is under the age of 6, this amount actually goes up to $3,600. The phase outs for these increased amount, that means the difference between the $3,000 and the $2,000, or the $3,600 and the $2,000, has actually been lowered. So if your AGI is over $75,000 for an individual, $112,500 for head of household, and $150,000 for a joint return, then your credit will start phasing out $50 for every $1,000 your AGI goes over this amount. As I said before, that these reduced phase outs, which we just talked about, basically, $75,000 for single, $112,500 for head of household, and $150,000 for joint filers, does not apply to the original $2,000. So we'll actually go over an example which will clarify things on how it's going to work. The partial $500 will not apply for dependents who aren't qualified children and cannot be claimed for 2021 for children who qualify under the expanded definition, the 17-year-olds, as we talked about before. The child tax credit is now refundable for 2021 if the taxpayer has a principal pace of abode in the United States for more than half of the year. IRS was thinking about making monthly advances actually of this child tax credit, but then they struck that out and replaced it with the wording called periodic advance payments of up to 50% of the child tax credit between July of 2021 and December of 2021. So we just have to wait for more guidance from the IRS to see how they plan to make these advance payments. I'm not sure if they'll open something on their website where everybody needs to register, or they just look at prior returns and kind of determine who would qualify for these child tax credits, and then actually give you an advance payment between July and December. It could be monthly, it could be every quarter, so we just have to wait for more guidance. So, as I said before, let's just run through a quick example of how this is going to work. So let's say X files as head of household with one child aged 10-year-old, and their modified adjusted gross income is $140,000 for 2021. Generally, they would qualify for the increased child tax credit of $3,000. But remember, we talked about the phase out amounts where the additional $1,000 starts going down. So in this case, the AGI is $140,000. Our phase out starts for head of household at $112,500. So what is subject to phase out is $27,500. My additional credit is $1,000 for which will be subject to the phase out. And if I take $27,500 divided by 1,000 times 50 to calculate the phase out, $1,400 is being phased out. So technically, X is not going to get the additional $1,000 for the child tax credit. What X would still qualify, because his AGI was less than $200,000, they will be able to claim the original $2,000 as child tax credit for 2021. Back to you for CPE poll number 5.
Okay, thank you, Shivani. Number 5. Which of the following is true about Saks LLP? Top 100 firm, celebrating 65 years of being in business, lives by the tagline, expect more, or all of the above? Give you a chance to start answering those questions. Top 100 firm, celebrating 65 years of being in business, lives by the tagline, expect more, all of the above. Give you a few more seconds so that you can vote on this one. No trick questions here, I don't think. Okay, I'm going to count down. 5, 4, 3, 2, 1. Answer. If you answered all the above, and 91% of you did, you got that correct. Back to you, Shivani.
Thank you. So continuing on to the provisions, more additional individual provisions, I'm going to now talk about the dependent care assistance. So before the act was passed, 35% of the qualifying expenses qualified for credit. That amount has now increased to 50% of your qualifying expenses can now be claimed towards the dependent care credit. So it has gone up from 35% to 50%. In addition, the amount of expenses that would qualify for this credit has also gone up significantly. So previous to this act, $3,000 was the qualifying expenses if you had one individual, and it was $6,000 if you had two or more individuals. Now the amount for that is $8,000 for one qualifying individual and $16,000 for two or more qualifying individuals. So essentially, if you can take 50% of that amount as a credit, you could get almost $4,000 if you have one qualifying child and $8,000 if you have two or more. There are some changes to the phase outs as well for the dependent care assistance. Let's just go over that. So prior to ARPA, generally, you would be allowed 20% of the amount as a credit because your AGI was over a certain threshold. In that case, it was, if your AGI was over $15,000, for every $2,000 that the AGI went over, your percentages would reduce by 1%. So the 35% which we saw earlier would come down to 20%, and then that would stay at 20%. It didn't matter what your AGI was. Now that has changed. And just to remind you that the dependent care assistance program, which we are talking about, these increases only apply for 2021 as of now. So what has changed with the credit phase out also? So now there are like different buckets, I should say. So if you're up to $125,000 of AGI, you would get the entire 50%. Remember, we said it went up to from 35 to 50. So if you're up to 125,000, you get the entire 50%. In between 125,000, after 125,000, for every $2,000 you make extra, the percentage starts going down by 1. So essentially, between $125,000 and $185,000 is when your 50% will start going down until it reaches 20%, right? So once you're at $185,000, you will be capped at 20%. That 20% doesn't go down further unless you make more than $400,000. So let's just recap this. If you're under 125, you'll get the full 50. If you're between 125 and 185, it will start phasing out until you hit 20. It will remain 20 in between $185,000 and $400,000. And once you hit $400,000, it starts going back down again for every $2,000 you make until it hits 0. So once you hit $440,000 of AGI, this will essentially become 0. The credit was not refundable prior to this act, and now the credit is refundable if you are living in the United States for more than half of the year. There were certain exclusions provided if the employer provided you assistance. It was $5,000 before and $2,500 if you were married filing separately. That has also gone up significantly to $10,500 and $5,250 if you're married filing separate. Certain other provisions, which I'm not going to go into much detail, but have also been provided under the American Rescue Plan are that your student loan or certain kinds of student loans, if they are discharged or they are forgiven, they won't be included in gross income for the year beginning December 31st, 2020 and ending on December 31st, 2025. There are also several enhancements to earned income credit, but we will not go into details of that because I don't think it really applies to most of the audiences here today. The third provision that was included is with respect to excess business loss. Excess business loss was introduced first by Tax Cuts and Jobs Act, whereby, if you were an individual and you had losses of more than $500,000 if you were filing a joint return, or $250,000 if you're filing a single return, they were disallowed and you could carry it forward. So that was essentially the provision that TCJA brought into place, and it was for the years 2018 to 2026. Then came the CARES Act, whereby these provisions were suspended for the years 2018, 19, and 20. Remember, we had advised, some of you guys to go back and amend your returns so you could claim these losses. So TCJ brought this into place for 2018 to 2026. CARES Act put a freeze on it for 18, 19, and 20. So essentially, this would now apply to tax years 2021 to 2025, but American Rescue Plan now extends that by additional year. So the provisions of excess business loss now actually apply from years 2021 to 2026. Okay, I think this is the provision that probably will apply to most businesses, and it's the COBRA premium subsidy. I'm going to talk about it in a little bit more detail than the other provisions, because I do think that this may apply to a lot of you listening onto this webcast today. So there is a definition of assisted eligible individuals. We are going to call them AEIs. If you have an AEI, they may receive 100% subsidy of the COBRA premiums for any period of COBRA coverage during the period beginning April 1 to September 30th, 2021. So if you have an individual, they are eligible for 100% subsidy on their COBRA payments for 6 months, which are beginning from April 1, 2021 to September 30th, 2021. The House version of the bill actually provided for 85% of the subsidy, but when the act was finally passed, they actually agreed upon 100% of the subsidy. So who is a AEI? A AEI is a COBRA qualified beneficiary who is eligible for and elects COBRA coverage due to a qualifying event of involuntary termination of an employment. That's key. It has to be involuntary termination of employment or reduction of hours, if you're reducing somebody's hours, and includes your employee, your former employee, a covered spouse, or a covered dependent. Now, if as a ex-employee you get this subsidy, this will not be included in your gross income. Employers, they are essentially subsidizing this. What do you get in return? What you get in return is a credit towards your payroll taxes. It's just against your Medicare payroll taxes. Your quarterly Medicare payroll taxes is, if any premiums you pay, you will get a credit towards those quarterly payroll tax returns you file towards your Medicare taxes. It's not against your Social Security or any other tax. What you can claim credit for is against your Medicare payroll tax. Now, we have to wait for further IRS guidance on how this will actually interplay with other credits that are already in place, like your sick leave, your family leave, your employee retention credits, because now all those credits can also be offset against your medical payroll tax. So we have to wait for more guidance and see how all this will interplay. But currently, the way the language in the act is that it cannot exceed your total Medicare payroll liability, and any credit you claim will be reduced by your paid sick leave, your paid family leave credit, or the employee retention credit. So I'm hoping IRS will issue more guidance soon, because then we can understand how exactly it's going to work out. If you have excess credit, then they will be refundable as an overpayment. So the election period is extended for certain type of individuals, basically two categories. Individuals who do not have a COBRA election in effect on April 1, 2020, but who would be a AEI if they did, and individuals who elected for the COBRA coverage but discontinued it before April 1, 2021 and are still in their maximum covered period. As you all know, the maximum covered period is 18 months. So if they are within that 18 months period, but they have discontinued COBRA coverage, they can come back and elect to be under this COBRA premium subsidy. The coverage may be made during the period beginning April 1, 2021, and it ends 60 days after that. So if you have an employee that left, they can come back. You have to provide them notices and between the period of April 1 and the next 60 days, and elect that they now want to be covered under the COBRA plan. So there are a lot of provisions which go under notices. Some notices are required by the individual to the group health plan, and then some notices are required from the group health plan to the individual. So AEI must notify the group health plan if they cease to be ineligible for a subsidy because maybe they found another job, or maybe now they are enrolled in some other group health plan. So if that happens, they need to notify the employer that, okay, I have some other coverage and I'm going to terminate my COBRA premium. If you do not do that, there are penalties of $250 for failure of notification unless there is a reasonable cause. If there is fraud involved, this penalty actually goes up to 110% of your premium assistance that was provided to you if it is greater than $250. Now, there are some provisions to provide notices from the group health plan to your AEIs, and basically there are three types of notices. The Department of Labor is instructed to provide model notices, which should come out within 30 days of the act being passed. So I'm thinking probably in the next 2 or 3 weeks, something will come out from Department of Labor on these model notices or these standard notices that have to be sent out. So what are the notices that the group health plan has to send out? So the first one is notice of assistance availability, that basically informs the individual that the availability of subsidy, or they can inform the individual that there is some other healthcare plan open which you can now enroll in. The notice of extended election period, it must be provided to individuals eligible for an extended election period within 60 days. We talked about that the election period is now extended 60 days from April 1, 60 days going forward. And the last one is notice of expiration of subsidy. This is to be provided between 45 days and 15 days before the day on which the individual subsidy will expire, unless the subsidy is expiring because the individual has now gained eligible coverage under some other plans. The last part of my slides actually go into the changes which are now in effect for the paid sick and family leave. So just to remind everybody, the paid sick and family leave came into place first with the Families First Coronavirus Response Act that was passed. Then there were some modifications made from the Consolidated Appropriation Act in December of last year, and now there are additional enhancements being made under the American Rescue Plan Act. So let's just go over some of the provisions quickly. The credit period for sick and family leave credit has now been increased. So under the Families First Coronavirus Act, it was April to December of last year. Under CAA, it got extended to March 31st, 2021. And now under the American Rescue Plan, it's now extended through September 30th of 2021. So through September 30th of 2021 is when you can claim the credit for sick and family leave pay. The eligible wages for family leave credit were previously $10,000 per employee under Families First and CAA. That has now increased to $12,000 per employee under American Rescue Plan Act. There was a 10-day limitation on the sick leave credit which could be claimed, and the 10-day period was essentially between April 1 and December 31st of 2020, both under Families First Coronavirus Response Act and CAA. CAA actually extended the 10-day coverage period from April 1 to March 31st of 2021. What American Rescue Plan does is it actually resets the 10-day period. So now you have a new 10-day period that actually starts from March 31st, 2021 to September 30th of 2021. They've also expanded, so if an employee is taking leave to either get a coronavirus vaccine or is recovering from vaccine-related illness or injury, you can now claim this as a credit if you're paying the employee. It's also expanded a little bit to the paid family leave provisions. So now this particular credit is also available for any of the reasons where the employer was mandated to pay paid sick leave. Basically, if your employee had COVID or somebody related to your employee had COVID, they were eligible for paid sick leave. So now the same provisions apply to paid family leave as well. Beginning on after March 31st, 2021, the credit is now refundable against Medicare taxes. And that's why I said that we are awaiting for more guidance to see how paid family and sick leave credits and all the other credits, employee retention credit or the COBRA subsidy, how all this will interplay, because all of these credits are now refundable against your Medicare tax. In addition, the last provision is if you're self-employed, the number of days for which a self-employed individual can claim the paid family leave is now increased from 50 days to 60 days, and that is actually retroactive for December 31st, 2020. Back to you, Todd.
Okay, so I'm wrapping this up. These are some other provisions that are part of the American Rescue Plan: state, local, and territorial governmental aid, vaccinations, testing, aid to keep schools open, targeted economic injury disaster loan advances, $15 billion, which includes $5 billion of supplemental targeted EIDL advance payments, limited to $5,000 for the hardest hit small businesses that suffered greater than 50% economic loss and has 10 or fewer employees. And there's other provisions: rental assistance, airlines, airports, and travel, and 50% increase to supplemental nutritional assistance programs, SNAP. So listen, folks, if you want to read the plan, you can certainly get it online. There's a whole lot of information in it. Okay, we're going to go to our last CPE polling question, question number 6. SACS's 2021 Founders Award top prize is $15,000. That is actually coming up really soon. We're going to be putting out the applications. If you know a not-for-profit that would like $15,000, stay tuned. Is the answer true or false? I think I just gave away the answer. Is the top prize $15,000 true or false? Give you some time to answer the question. Few more seconds. I'm gonna close out the poll. 5, 4, 3, 2, 1. And if you answer that question true, you were correct. 2021 Founders Award is a $15,000 award to the winner. And with that, just going to go over our last slide. We don't know when we'll have the next recovery update. We're going to certainly have them at least once a month, but as information comes out, we are scheduling these, so make sure that you are watching our invites to you. You can get a copy of the slides. If you registered, you will get a copy of the slides, but just so you know, tell your friends. They can also go right on our website and you can actually relive, if you really want to, these webinars on the SACS website under events and webinars, and we list out the webinars by date. And we are available for any questions. If you send us an email to covid19@sacsllp.com. Also visit our SACS COVID-19 Resource Center, which will be found on our website. And also check out our new service line concerning employee retention credits, because you do need to do this correctly, folks. Especially if you've gotten the PPP money, you can't claim the wages for both ERC, the same wages for ERC and the employee retention credits. This is getting very complex. So check out that service. Happy to answer any questions that you may have today. Shoot us an email and we will see you next time. Wishing you a successful and prosperous day. Take care until the next time we meet.